Inflation is up. People are concerned. There's a lot of misinformation out there. Chaos. With all that being said, where can you put your money right now? I'm Juan.
And I'm Lauren Capwell. And today we're going to look at the 6 most common types of investments, and we are going to rate them from the riskiest to the safest.
Assuming that you have money to invest and you're trying to figure out where should you place it. Now we know for sure that sitting on the market and not making it work for you is not a safe investment. We know that by putting it to work is where you're going to have appreciation and growth and a return from that money. So let's get into all those options.
All right, so starting with number 6, which we have ranked as the riskiest investment, crypto. So one of the things that we know for certain about crypto is while it has made a small number of people very wealthy, it is very, very volatile. That means that it has big booms and big busts. And actually right now it's July of 2022. Bitcoin has just lost more than 50% of its value for the 8th time. So we are in another big bust cycle for crypto. So that's why we're ranking it as one of the riskiest investments. What makes this attractive is that in investing, it's always a balance of risk reward. High risk means potentially a high reward, but it also means that your investment could go to zero. So that's why we are ranking Bitcoin or all crypto as one of the riskiest investments right now. So should you invest in crypto?
I would say invest the money that you in your mind would be okay with losing. I do believe in crypto long-term. I do believe that if you have a long-term view on the crypto, it's going to bounce back. I am fearful when it goes to zero. That's scary. So only put in what you could invest, what you feel comfortable with. But buying at the bottom, that's if it's the bottom, then this would be a safe time to get in.
Number 5, private loans. What are private loans and why have we rated them as number 5 for most risky?
Private loans, it's going to cover a big array of different types of investments. I call them more entrepreneurship type loans. At the very basic level, let's say a friend wants to buy a business and they want you to go in on the deal. So they want you to put up $100,000 or $200,000 to be part owner of a business. Now that could be all types of businesses, right? So that would be a private loan. You're banking on someone on this one concept. Other types of private loans are real estate loans. Not all of real estate is lended by a bank. Sometimes we have folks that have significant amount of money and they will cut us a check and we pay them 7 to 8% on their private loan. And so these are the types of private loans that we're talking about. It's large array. Now, we do believe that they're risky. Some of the loans are secured by real estate, which then I would say they're less risky. But at the same time, you're kind of putting all your eggs in one basket, whether it's your friend, whether it's an uncle, whether it's a spouse, someone with this great idea that has yet to be proven. We would consider those the risk level, number 5. There is a reward. I'm not saying these are bad investments. I'm just saying from a risk reward level, that's going to be a little risky.
So coming in at number 4, we have the stock market. Now, I know this might be a surprise to some people, but the stock market, if you look historically, especially more recently, like from my generation, the millennials, from our perspective, like we've seen like a few major stock market crashes just in our lifetime. Now, there's been a lot of regulation changes that changed, I think it was in the late 90s, that allowed different types of lending that really affected the stock market. So kind of the stock market of the past is not necessarily the stock market of the future. However, we do believe long-term in the stock market that it will continue to go up. It just has a pattern more recently in the last couple of decades of being a lot more boom and bust and volatile. Not to the degree that crypto has been, but in terms of its risk reward profile, we do see this as potentially being a riskier investment, especially when you're looking to retire. The potential for it to suddenly be in a bust and you having to push out your retirement, like that risk is definitely there. So as far as timing, getting into the stock market, what do you think?
Here's the thing. Because I have the investor mindset, you should always be investing. And so we know that the stock market is down by 20%. I'd say get into the stock market. It is ranking in terms of risk and reward. We do have it ranked today, but overall, if you're comfortable with the stock market, I still think it's a safe play. I think long term, it's gone up 10% historically. So it is a safe play. And if you have money to invest, I would recommend the stock market. Can it be outperformed by other investments? Is it safer than other investments? Possibly not, but we'll get into that next.
Number 3 is savings. Now, I know this one might be kind of a surprise. Here is our rationale. With savings and the savings rate, while the reward is super low, the risk is also super low. One of the challenges that we're facing right now is that we're in a period of inflation, and the savings rate is much lower than the inflation rate. However, if you're counting on getting a particular return on your money just by having it sit in a savings account, it's essentially guaranteed.
Here's what I have to say about savings, because a lot of our clients are saying, we're going to stash cash and they're going to wait for the next thing to invest because they're waiting for an opportunity to get in. If you put your money in savings, it's going to be a small return. From an inflation level, it actually is losing. But if you're telling me that you're keeping that money there because you're waiting for some bust in one of these investment options and you're going to act, maybe it's the time to act in crypto. So long as it's there temporarily because you're looking for an opportunity, then I'm perfectly fine with that.
Coming in at number 2, we have Treasury bonds. Treasury bonds might not necessarily be the most exciting asset to have because of the low return, but they are extremely low risk. They are very, very safe because they are backed by the US government. It's kind of that, again, coming back to that risk reward thing. They're low risk, low reward.
Treasury bonds, from what I know, is a lot of the folks that are up there in age, sometimes they will sell their real estate. They'll have us sell their real estate and maybe they don't want to go buy more and they don't want to buy a Jack in a Box or look at these alternatives. Sometimes they just keep the money in the Treasury bond. And from my perspective, going back to motivation, sometimes you might be a point in your life where that just seems safe. That seems safe and that's perfectly fine if that's where you find yourself. Are you maximizing your return? Absolutely not.
Last but not least, coming in at number 1, safest place to invest, should be no surprise, real estate, especially income producing multifamily real estate. Now, this is the asset class that has over the years been shown and proven to have made more millionaires than any other asset, more than stocks, more than anything else. So should be no surprise we are rating it as number 1 best place in terms of the risk reward ratio and the bang for your buck.
If you're an investor and you're sitting on a significant amount of money, you have to put it to work. And at this point, we see no other investment vehicle that tops, that is safer, and the risk reward is better than real estate. Please comment below if you're going to tell me of something that you're going to say is much better than real estate. Because if you're sitting on money right now, when we think the word recession doesn't just apply to real estate. It applies to every other industry that's out there, every other investment alternative. A lot of the people who watch our channel will comment and say, I can't believe you said real estate was going to go up during a recession. Haven't you followed such and such economists? Listen, there's thousands of economists and every single one's going to say something different. We base everything that we say, not on opinion, not my gut feeling, but on simple facts and trends. And what we know is that during a recessionary state, out of the last 6 that we've had, 4 of them, we've had real estate prices increase. I know you may disagree with me. Wait, when I think recession, I think real estate's gonna fall. That has not been historical trends. And so recession, high interest rates, high inflation, I'm gonna continue to double down in real estate because I like to say that it's not get rich quick, but it's get rich guaranteed. So there's 3 reasons why the real estate industry has made more millionaires than any other industry. So let's just say that you want to be a millionaire, you want to be independently wealthy. Wouldn't you just continue doing what everyone else has done to get there, right? I know there's shinier objects out there, but if you're someone who wants to guarantee your success, maybe you want to change generational wealth in your family, I know that I certainly want to do. I'm going to bank on what everyone else before me has done is they've made wealth through real estate. And there's 3 reasons why. 1, you get to borrow and increase your buying power. The one thing about real estate that's different than all the other alternatives that we gave you is the ability to leverage. Now, let me break that word down for you. When we say leverage, it is an industry term. It just means borrow money. So if I have $100,000 and I go buy stock, I get $100,000 in stock. That's it. If I buy real estate, I don't own $100,000 worth of real estate. In one instance, that might be 10% of some apartment building. Well, now I own $1 million apartment building. That is what we call leverage. That is what we call making money on the bank's money. So we're going to borrow the money from them and hopefully we make a smart decision in what we bought and we're going to make money on their money. That is where wealth is created. So I know that there's a few little other alternatives that I let you to borrow, but nothing lets you extend your buying power like real estate. So there's that. We have appreciation. Real estate has continued to go up because it's a tangible asset. So can real estate go to zero? We've never seen it go to zero. Does real estate generate income? It consistently generates income. And our third point is the fact that it's tangible. I could go there and knock on the door. I could kick the tire on the property, and you have the control. So if you own real estate, you're in the control of the amount of income that it brings in, the improvements that you're going to make, and how you manage and own the property. And if you do so strategically, you yourself as an individual can increase the price of that asset. I don't know that you could do that with the stock market. Neither do I think you could do that with any other alternative that I just gave you. With real estate, you could control that. You could lead it in a certain direction where you make that property succeed and win for you. And worst case scenario for some of the folks who are going to say, yeah, but real estate goes down in value. It does go down in value. Every asset goes down in value. It also comes back. And when it comes back higher than it's ever been. While the values may go down, if it's a income producing property, whether you own a commercial building or an apartment building, someone's still paying rent. So someone still needs a roof over their head. And so that income producing property won't go to zero. It's going to continue to generate income, which determines the value of the property. Also with real estate, some people are going to say, well, you can't sell it fast enough. If you put something on the market today in this current market, between 1 to 3 months, you're selling the property. If you're tired of owning it, you're tired of managing, there's always going to be a buyer for that property. And right now, we have a long list of investors that want to get into the real estate investment game because they believe in it in the long term.
And there you have it, our ranking of the 6 most common investments from riskiest to safest.
We hope you enjoy the show. Make sure to like, comment, and subscribe. Until next time.